Thousands of Australians are sleepwalking into financial stress. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at Channel 9's take on the latest Financial Brokers Association of Australia study, really with regards to mortgage repayments and how stressed people are about this. So, they've gone with the headline, Australians sleepwalking into disaster, as interest rate hikes threaten to plunge thousands into financial stress. Now, financial stress doesn't mean that they're all going to be forced to sell their mortgage, that the banks are going to knock on the door and kick them out of their homes. It means that, well, according to this definition, they'll be spending 30% of their gross income on their housing costs. The worry is there'll be some people that are already well above that are already technically in financial stress, and then they get tipped over the edge by interest rates going up. I mean, have a look here at the cash rate. Do you remember the last time rates went up? Do you actually have it in your memory? Can you remember? Think back. Does that memory still exist? Or has it been replaced just with rates going down again and again and again? I can't remember it. I'm thinking back 2010. It's not there. It's not in my head. Maybe it's just my terrible memory. That could probably be true. But there's going to be people that only know rates going down, that only know this. We've had our first recession in 28 years, and there's mortgage holidays, there was free money flowing from the government for everyone. It was just crazy. So let's have a look at Channel 9's take on this one. The head of Australia's peak finance and mortgage broker body has warned that Australians are sleepwalking into disaster, as any rise in interest rates would plunge thousands into financial stress. Peter White, AM, Managing Director of the Finance Brokers Association of Australia, the FBAA, said recent research conducted by McCrindle was a wake-up call that many borrowers may be living beyond their means. Aren't many Australians living beyond their means just in general? Financial literacy, having a emergency buffer, it's never discussed. It's never really discussed. It's just buying housing. That's what's in all the media. Whenever the ABC does a sob story about someone, it's just call some more government intervention. Never how the poor person should have, got their shit together and taken responsibility for their lives. We never see that. That's what needs to happen here. There are going to be people here that are pissing money away on stuff they don't need, luxuries they can't afford, buying stuff on credit, going into afterpay debt, all of this stuff. I mean, don't get me wrong, buy a toy if you can afford it, but pay in cash. Make sure you have the money there before you go out. And that will be this may be the slap on the face that people need to get their stuff organized, to get it together. No, I bet you a carton that there is no one out there that has been perfect with their finances their whole life, that hasn't made a stupid decision, that hasn't wasted some money, that hasn't, lost some money on something stupid or lost control over something when they were focusing on some other part of their life. That's normal. That's nothing to be ashamed about. But the goal should be to get yourself financially secure and stable. That should be for everyone. And that doesn't mean having millions of dollars sitting aside. I mean, that'd be nice. It means having a nice buffer of cash in reserve as an emergency fund in case something goes wrong, that you can draw upon that you're not going to be desperate. That's the difference. And then the next stage, what I think is the real goal, is where you can have enough money, FU money, so you can control your time. You have control over your time. That's what you need. That's the secret. And I think that's the path for all the FIRE movement. It's not about actually retiring. It's about having enough money to control what they do with their time. Anyway, commissioned by the FBAA, the research shows 66% of borrowers would be under pressure if interest rates were to rise, and 57% would not be able to make repayments if their mortgage were to increase as little as $300 a month. Many Australians are clearly on the brink and are sleepwalking into disaster, living in the false hope that rates will stay this low, Mr. White said, or they've been conditioned to expect the government to come to the rescue. What do you think's more likely? Can you blame them? They only know interest rates going down. They only know the government going to the rescue. They only know people getting mortgage holidays. And they've seen property just go up further and further and further. They're probably sensible, saving, trying to build up a deposit, but they couldn't keep up with the insane growth of property. So they've just had to take the plunge. They just had to take the plunge. Can you blame them? So what's going to happen? What I think this is telling us is that once we see rates go up, we're not going to see a flood of property on the market. This isn't going to be a huge crash of people just desperately getting out. They're going to cut to the bone. And discretionary spending is going to plunge. Weekends at the cafe is going to disappear. All luxury items is going to disappear. All subscriptions are going to disappear. The one concern is that people will be eating a lot more rubbish to save money. That has long-term health consequences, but still, they'll find ways to go cheap. We've had to do it. We have gone real tight. And it's probably good for you too. So, this survey is a wake-up call and shows that even a small rise in rates, which is looking more likely next year with rising inflation, could be catastrophic for our nation. Bit of melodramatic there. What's he want? What do the brokers want? Let's think about this. We saw again and again article about rates crashing down, interest rates down, elections coming up. What do they want? What do they want? Am I getting too cynical? An industry veteran of more than 40 years, Mr. White said it was possible that Australians had grown complacent after almost 11 years without seeing a rate rise. Yeah, yep. Bloody oath, I agree with him there. The housing market has soared, and there is a reasonable chance we'll undergo a correction, meaning that those with low deposits who have stretched themselves to make large repayments could see themselves with negative equity, owing more than the value of the property, Mr. White said. Add a mortgage increase they can't pay, and there could be a lot of people in real trouble. Among those who said they wouldn't be able to afford their repayments following a $300 monthly rise were households that earned between $2,000 and $3,000 a week, proving that mortgage stress was not only looming for low-income earners. Okay, that's the definition of it, of housing stress, is for low-income earners. If you're earning $3,000 a week and you can't afford $300 extra repayment on your mortgage, then you're doing something wrong. Okay? You're doing something wrong. This is telling me, because the banks, they account for a 2.5%, 3% buffer in your repayment ability. This is telling me people are pissing money away on stuff they don't need to. They don't have their budgets under control. This isn't telling me that we're all about to collapse. People are wasting money. What do you think, everyone? $3,000 a week? I mean, come on. Well, that's 150 grand a year. You can easily afford another 300 a month. Okay? What's going to happen is that, oh no, the extra money they're investing in stocks or this or this or this, maybe that might have to take a bit of a trim. Because if my mortgage went up, which I'm expecting it to, I'd have to cut back on my discretionary investing, and probably cut back on some of the, oh no, not really. I don't really spend that much. Although I did buy some AirPods. Noise cancelling in a house with 6 kids. That's an investment. Saving me from hearing aids. Anyway. So, where do these people go if they have to walk away from their home? Public housing, the street yard? No. Come on. Work up with the drama there. No, they cut back on the shit they don't need to spend. They take little Jimmy and Jill out of their pretentious bloody school and stick them in a POV state school, okay, with the rest of us plebs. That's what happens. You sell the car, you cut back all this stuff, or you keep the car and you start doing Ubering on the weekend to make that extra $300. Okay, you could do that in 2 days. 2 days a month, you could make that money. Okay, if you had a nice car and you're Ubering. There you go. There's a solution. You could find other ways of generating income. You're not going to go on the street or to public housing if you're earning $3,000 a week. What bullshit that is. This is just more of this FOMO crap. I mean, what are they pushing for here? What are they pushing for here? It's Channel 9. The options for lower income earners are slim, and this will reverberate throughout our society, most likely on the back of COVID economic struggles. Well, lower income earners, and we're talking about here, hang on, households, $433 a week. Okay, very low income earners. How many of those have got mortgages? How many of those would even be able to get a mortgage? It's probably cheaper than renting in some parts. But then it's the same thing. You find other ways to make money. When I was doing Ubering, because we lost a year worth of work, so that's when I had to scale back the whole business, find all the money we were wasting, sort everything out. And for that, this is over the Christmas period too. And for that period, I drove Uber because, construction projects often either they're going crazy or they're dead. We didn't have any work then. And for the last couple of years, a lot of our work has all started on Christmas, quite ironically. But so I was doing Uber. I was doing Uber just to keep cash coming in. And you know who I would see all the other drivers, other middle-aged family men, just earning a bit of extra money. Okay, what's wrong with doing that? Has this... Australians, are we lazy or a bunch of hard workers? I thought we were a bunch of hard workers. Tell me. Mr. White, here we go. Here it is. Mr. White called on the government to prevent lenders from lifting loan floor rates and urged Australians not to take on mortgages that might see them making repayments with payday loans, personal loans, or credit cards. That's good advice. If you are making repayments with payday loans, personal loans, or credit cards on your mortgage, then you need to get some financial coaching or training. There's organizations out there, I really should try and touch base with them to plug them here. There's organizations out there that provide counseling to people in this situation because we get no financial training. You know what? Go watch Dave Ramsey if you haven't seen him. Watch him, some of his lectures or videos on YouTube about how, it's very American-based, but the strategies people use to pay off their debt. Australia's interest rates are currently at the historic low level of 0.1%, following multiple emergency cuts to the cash rate to stimulate the nation's economy. Prolonged periods away from the real estate market, combined with cashed-up workers and historically low rates, have contributed to what Mr. White describes as an overheating housing market. Digital bank expert from Compare the Market, David Rudiman, said the fear of missing out, dubbed FOMO, is a powerful motivator. Well, yeah, think about it. Can you blame people? This is the first time they've seen a correction in any market, and it's the only chance some of them think they have to get in. The government is throwing money at it. I was hoping there'd be a slowdown in construction, so it would be cheaper to build. No, not at all. Took off, went crazy. The retail got hit, other sectors didn't. Buyers have been spooked by forecasts indicating the prices will continue to grow. In some ways, they're fulfilling the prophecy by making bigger offers than they usually would, he said. The figures show the fear factor has been crucial in driving trends, with 63% of respondents admitting they bought as quick as possible to avoid surging prices. Oh, no. Look, but then again, rent's going up again and again and again too. Looking at recent price rises, it's a strategy that could well have paid off thanks to even greater capital gains. What's important is that people are prepared to weather the blow of potential rate hikes and inflation in the future. Australia's housing values are currently rising at the fastest annual rate since June 1989, having increased by an eye-watering 17.6% over the first 9 months of 2021. So there you go, guys. Let's have a talk about this one. I suspect we're going to see more and more of these type of articles warning about this. Is the second one we've read on this very study. And there's another one I'll look at too. But also remember, there's calls and pushes to intervene or restrict more restrictions on lending. They want to free up lending. They want to tighten it. We'll have to see what's happening here. I feel sorry for people who are struggling and at the edge. But honestly, there's a lot of people out there that just need to get their finances in order, and this may be just the wake-up call that they need. Anyway, guys, watch the last video I did on this very topic. About 50% of mortgages would be in default or at risk of housing stress. And remember, that 30% housing stress, even if it's at 40%, it may still be better off than when you were saving for a deposit to get in. Take care, and I'll see you next time.